This is Bazaar Morning Call, broadcasting live from the CNBC TV 18 Motilal Oswal studios in Mumbai.
Hello and welcome to Bazaar Morning Call. We're coming to you live from the Motilal Oswal CNBC TV 18 studio. I'm Nigel D'Souza. Joining me today is Sonia Shana, who's coming back after a holiday, and Rima Tendulkar as well. Morning, girls.
Hi, good morning, Nigel. Good morning, Rima.
Good to see you, Sonia. It's been a while.
It's been a while, yeah.
How was your holiday?
It was great, thank you. And so much has changed, right, in the last 2 weeks. I mean, there's now GIFT Nifty instead of SGX Nifty. Their markets hit record highs. Their threads and
you missed the battle in the biking industry.
Bajaj has launched the phone, and I was just thinking about it. All this in just 2 weeks.
2 weeks,
it just goes to show that the markets change so much in a matter of time, and then things are all still good.
I think
by and large.
I think the last time we had you on the show, Sonia, we were wondering about 19,000 odd. You were away. We went to around 19,500. Now you're back. Hopefully, you're the good luck charm. You take us to 20,000.
But Nigel, I was just thinking every time I go and leave, the market surge. So maybe I should take longer leave.
That's so cute. I didn't want to be so blunt. I was trying to turn it around, but you said...
But it's the truth, right? It's a fact.
It is what it is.
And now, the market, I think only on Fridays when the market was slightly under a bit of pressure, but largely the setup looked very good. So let's kickstart with just a couple of data points before we, of course, get into the details. The big data point this morning is global Qs, right? I mean, they've been a little bit subdued on Friday, so there was a sell-off that we saw. The Dow was under a bit of pressure, almost 200 points gone. And give and take everything, the non-farm payroll data was extremely strong. So the expectation is that on the next Fed meeting, which is on the 26th of July, is when you will have the Fed might hike rates. So in that context, there's a little bit of fear that crept into the US markets, and that's what caused the trepidation on Friday. For our own markets as well, after 8 straight days of gains, Friday was a bit of a weak spot, but no problems there. In any case, you had strong buying that continues to come in from FIIs and from DII. So foreign investors, in fact, in less than a week in July, have bought over 9,000 crores. Now, if you look at the setup, it's going to be an earnings-heavy month, and we kickstart this week with TCS and HCL Tech on the 12th. You have Wipro on Thursday, and then you have Infosys on the 20th of July. And as Rima has been telling us, ad nauseum, is going to be a weak quarter for the IT sector because of a cut in discretionary spending. So I think the market is, just prepared for weakness in this space. In the US as well, you have BlackRock, JP Morgan Chase, Wells Fargo, Citi, all will be reporting their Q2 numbers this week. So lots to track. And I think your work is going to go up in the next fortnight. Are you prepared for that?
Yes, I'm prepared. I've already done my previews for, HCL Tech, TCS and Wipro. But just a quick word, the Dow was up 114 points before it slipped to close down 190 points. So there was a reversal. So initially, the markets cheered the June jobs data, because it was markedly lower than what the street was anticipating. But then when the internals came out and the street took note of the wage growth at 4.4% on a year-on-year basis, it's still at uncomfortable levels, perhaps for the Federal Reserve, and that resulted in the market slipping in the second half of the trading session. So the Dow reversed nearly 300 points from the top. That said, Asia is still on a pretty strong footing this morning. Hang Seng is currently up 1.3%. The Taiwanese markets are up nearly 0.5%. One more point about the internals. The FI inflows in the markets have been slowing down. On Friday, they bought 790 crore. Yes, it was a down day for our markets, but look at the flows number. On Friday, 790 crore. But over the past week or so, we've been averaging inflows of nearly 2,000 crore. And the DII selling has also picked up on Friday, inching towards 3,000 crore. So as a result of this, the net institutional flows turned decisively lower. And on Friday, we're looking at that down, a net sell figure of more than 2,000 crore rupees. And, talking about earnings, while the heavy lifting will be done by IT, you still have some other mid-caps reporting numbers. You've got a Federal Bank, Bandhan Bank, a D-Mart on Saturday. So keep your eye out on these mid-cap companies reporting numbers this week, even as technology will dominate the action and the sentiment. Nigel.
All right. In Friday's trading session, actually, it was some sanity that prevailed, right? We had a pullback after a few trading sessions, and that wasn't too bad. Also, a couple of other data points. The PCR, well, it was running away to around 1.51. We're making this point, it's trading at the upper end of the range. The PCR cooled down to around 0.89. The FI as well, they were showing us the big money. They were adding longs as well. And I was making this point on Friday morning as well. It was getting too comfortable for comfort, maybe a little bit too cute. So we saw them adding some short positions and they wrote calls as well. So as trades is set up today, the IT stocks, well, they are likely to see more or less a consolidated phase or maybe in fact a bit of a downtick as well getting into earnings. So don't expect much from the IT space for the bulls. The Reliance Industries, that's the one that could support for the next 9 to around 10 trading sessions because you have the demerge of the Reliance Jio Financial Services, which will move out of there. So in the run-up to the record date, you could see some pre-buying on that one, and the bulls will be banking on that one. Now, till the Nifty holds at 19,000 odd mark, you'll have to say that this uptrend is pretty much intact. Let's get to a couple of data points then. The net institutional figure, well, it was a negative number for the first time since the 26th of June 2023. That's the FI and the DI number put it together. So the first sell number, and that was to the tune of closer on 2,000 crores. What are the FIs doing in the F&O market? Well, they added short positions. They added closer on 6,000 shorts. And the long positions, they unwound closer on 5,000 long contracts. Now, on Friday morning, we made this point that when the net long positions moved to around 1,01.02 odd, as they did at the end of November, we normally see the market getting a little bit too overheated. And that's why that's pulled back a little bit. Now, the net long positioning, it's still very, very high, but it's come down to around 92,000 odd level. I think you should keep that trigger. Once it moves to around 1.02 lakh contracts, net long positions, that's a sign of caution. On the index option side, well, they bought calls. They bought closer on 5 lakh call contracts. That was in the ratio of closer on 2 calls for every 1 put. The problem for the bulls is they're writing calls aggressively now. And they wrote closer around 5 calls for every 1 put. More than 3.4 lakh call contracts is what they wrote. And there were 2 strikes that were very active. 19,400 call, 19,500 call. Between them, they added close to 1.5 crore shares odd. So aggressive writing being seen out there, which brings us to the levels. Now, since you're seeing writing at around 19,400, 19,500 call, that 19,500, 19,520 level, that becomes a key resistance zone on the upside. That was the recent high as well. On the downside, till that 18,930, 18,000, around 19,000 or that holds out, you'll see this uptrend is intact. For today, I'm looking at the support level at around 19,233 to around 19,285. I say this because there was some bit of writing that was seen at around the 19,400 and 19,300 put. The Nifty Bank, that's going to be the important one out here. Remember, it pulled back in Friday's trading session. You have the near-term support at around 44,700. And that's because the highest open interest on the put side is at 45,000 put. So keep an eye out on that. If that breaks, then you're looking at a deeper correction towards the 20 DMA. The GIFT Nifty is suggesting some bit of green to kickstart trade. I think you get a bit of a pullback intraday. Keep a stop loss in place. And given the kind of correction that we saw in Friday's trading session, maybe we could look at buying it. But buy on the dip, don't chase the opening.
By the way, crude prices have also inched up.
Yes.
Yeah, Brent crude is currently at $78 plus. Last week, crude prices went up by nearly 4%, making it the second consecutive week of gains. There you have it. Brent crude at 78.2. Last week, we were hovering around $75.5 per barrel.
Also, another thing, which is of course positive for our markets is that the monsoon situation, right? I mean, it's turned to surplus now. It was in 10% deficit. Yeah. And in just 8 days, the monsoon situation has gone to surplus, which I guess, of course, there are a lot of issues in North India, etc., in terms of excess monsoons. But overall, surplus monsoon is good for the markets as well.
Indeed, we'll discuss all these cues on the show. Let me tell you what's lined up first in the next 30 minutes on the show. So first up, we'll get updates from the markets across the globe with Fook Heen Yap of Standard Chartered Bank. He will join in to discuss the global trade setup. Later, our research team will bring you CNBC TV 18's list of top 10 stocks for the day. And at around 8:30 a.m., we will do a fundamental stock analysis with Prakash Diba.
All right, let's get you some money market views. First up then, on the rupee, Kunal Sudhani of Shinhan Bank says the unimpressive US jobs report triggered a massive sell-off in the dollar index and the US Treasury bond yields across the curve as data dampened expectations of further rate hikes after July. The Chinese yuan cooled off versus the dollar while Brent crude prices edged higher. For the dollar, INR 82.45 acts as a support and 82.80 acts as a resistance.
On the bonds, Ajay Magnolia of JM Financial says the 10-year yield has been steadily rising, mirroring the rise in US yields. Nevertheless, demand in Friday's auction resulted in a better-than-expected cutoff. Stability in oil prices has been trying to play an anchor while CPI data this week may turn the direction in either side. He expects the benchmark 10-year yield to trade in a range of 7.13 to 7.18% for the day.
Well, we have a lot of stock-specific action to track for you, and we'll get to that in just a bit in our special Top 10 segment. Well, we're looking at Reliance Industries, IOC, Mahindra & Mahindra, Hindustan Zinc, Auto Pharma, Prism Johnson, Ramco Cements, IRB Infra, and Max Ventures. All of them on the back of positive news flow, while on the flip side, you have Vedanta that could be reacting to negative news flow over the weekend.